Hello everyone, welcome to the Ichimoku.co daily futures market review for the trading day ending Tuesday, September 1st. Well, firstly to gold futures, and here we see a continuation of the trend to the upside today, a candle making a higher high and a higher low on a white body candle, so net momentum is to the upside and continues with the buyers. The problem for the buyers here, however, is that they've failed to close with control. We have this largish shadow on the top, and that represents the buyers losing commitment, significantly up above the 10% indicator and above the 1145.8 level of previous support and resistance. The price rejection there does raise some doubt about whether the buyers are going to be strong enough to continue the trend to the upside. So there is a possibility of a change of trend to the downside, even though we have a white body candle. But 1133.9 is held as support for today's trading and resistance for the 2 days prior. So that's going to be a very important benchmark for this market. But if the sellers are strong enough, they could trade down to around this 1124 region. Now, if we do see the market trade down to that area, it's very close to the bottom of the Ichimoku cloud, and we also have the Kijun-sen trading there. So even if the sellers do come into this market, then they'd have to be very strong to breach down through the Ichimoku cloud, so unlikely for that to occur. If the market does continue to the upside, we'd have to see a breach through the Tenkan-sen and then through the 1145 region and the top of the Ichimoku cloud around 1152 for this to turn into a strong bull market. But the opportunity is here for gold and for the bulls in gold to change the trend in the long-term time frame. Now, just looking at the Fibonacci extension or Fibonacci projection technique here with gold futures, and here we've seen today the market test exactly to the 50% level. So we're examining the relationship of this current first time frame uptrend to the immediate previous first time frame uptrend. 50% strong rejection from there, the buyers, losing control, and the buyers losing commitment up above these areas and suggesting a possibility of a change of trend, but we do require confirmation. So we'll be watching the low of the current candle at 1133.8 very closely for a potential lower high and lower low. Also, with the Fibonacci retracement tool, we saw the market testing up through the 50% level, almost to the 61.8% level, with the rejection here suggests the possibility of a change of trend. Probably not as strong a signal here as with the previous technique, but the previous technique really was exactly to that 50% area, and the rejection here has been quite strong. Moving next to Nymex Oil, and here we've seen the sellers come back into this market. We've had previously 3 very strong bullish trading days. The market really looking a little extended in the depth of these 3 candles, and today selling. The sellers taking control away from the buyers, strong commitment, and breaching down through a couple of levels that could have held as support. Firstly 46.72, then 44.78. The key level to watch here, however, is around the Kijun-sen and the Tenkan-sen, around this 43.63 area, 43.50, and this area may provide some support. But if we see a strong bearish breach down through these indicators, we would then have a bearish market in all 3 timeframes and a resumption of that very strong downtrend. If that area is breached, look into 42.45 to potentially hold a support, but if that area is breached, then we could end up trading back down around this $40 round number level. Moving next to wheat futures, and following the breach down below the 488 level, we saw a formation of a hammer type pattern, and we have had confirmation of that reversal today with the current candle making a higher high and a higher low. The problem for the buyers here is that that new first time frame uptrend has been established on a very weak candle, where the buyers have failed to take control. The sellers have taken control by closing between the midpoint level and the low. It's only a weak form of control, but importantly, the control has not swung to the buyers. It's here back with the sellers, and formation of the small bodied candle suggests that net momentum is not with the buyers as well. Very strong price rejection from the 488 level of previous support, now turning into resistance, and a possibility of us seeing more selling in this market. So we'll be watching for another change of trend to the downside here, watching the low of this candle 482.25, and if that area is breached, we could easily test down to the lows here about 476, and then even possibly down to about the 466 area. Now, all of that negative trading would be in line with the market being bearish in all three timeframes in terms of Ichimoku, trading below the cloud, the Kijun-sen and the Tenkan-sen, and the Chikou span here is below the corresponding price action, so it's confirming the negative momentum in this that we have in this market, suggesting that we could see further downside. Moving next to corn futures, and here we've seen strong selling in this market today, and this is the largest black body candle that we've had for quite a few weeks. Only the second fairly large black body that we've had over the last probably 3 or 4 weeks actually. And the sellers have taken control of this market, and that follows the market being rejected from the 376 level of previous support and resistance. That area held for 3 consecutive days as resistance, and today we see some strong follow through. Now, important trading here at this 367 level. We've seen over the last month that that area has held as very strong support. So it's a very important level, but with this strong build of momentum down to this region, it certainly does look as though the sellers are going to attempt to breach through here. Strong early bearish activity through there could end up seeing corn futures trading down to the 359 level, and that's an area that we should be watching for some strong support to come in. But this bearish activity in this market is also in line with this market being negative in all 3 time frames below each of the Ichimoku indicators, and also supported by the Chikou span. Moving next to US 30-year bond futures, and here we see a continuation of the trend to the downside today. A candle making a lower high and a lower low, but on a white body candle. So a shift in net momentum from the downside to the upside, a breach up above the 154.27 level of previous resistance. So some bullish activity coming into this market, but we did see the buyers lose commitment up getting close to this 155.27 level, an area that's held as resistance over the past week or so. The build of momentum suggests that the buyers may be strong enough to breach up through that 155.27 level. If they do, we could then eventually see the market extending up to 157.12, but any selling coming in would need to breach through 154.27 level, holding as support, and if we do see that, we could test down to 153.11. And next, moving to the S&P 500 futures on the hourly charts, and if we look at today's session, we opened down below the Ichimoku, Kijun-sen and the Tenkan-sen, within the cloud, finding support initially at the first pivot point support level, and then sold off very early to breach down through the Ichimoku cloud in a strong bearish manner. The market then attempted to rally, and that second pivot point support level actually held as resistance, and very often we see that, and that really suggested there was a lack of strength from the buyers. The sellers then came back into the market to extend down to the third pivot point support level, and we've seen some buying come in off there, unable to rally in a bullish manner through the Tenkan-sen, suggesting that there was very strong negativity continuing in this market. Extending through the third pivot point support level suggested that we were at something of an extreme. Very often when we have these extreme days, we don't tend to see follow through the next day, so we'll be looking for this market not to be as bearish for the next day as it was. But the problem is that when we have these extraordinary days, as we saw over the previous week, a lot of those rules that we generally see go out the window. So we can't just rely on this market not extending down. But I'd suggest that we're not likely to see the market extending down to the third pivot point support level. And if we do see selling, we'll be watching the first pivot point support level, 1884, very closely to hold as support if the market does trade down to there. Now, the problem here with this new session is that we've opened a long way down below the Ichimoku cloud and the Kijun-sen indicator, just looking a little overextended, but the buyers are going to have to be very strong to change the bias in that longer term time frame to breach outside of the cloud early in this trading session. As we get into the next day or so and late into this session, if we can maintain price action around these levels, the cloud actually moves down, and it then would be easier for the buyers to breach back up through there. So we'll be watching the trading activity, especially late in the day, very closely if we don't see strong selling in this market.